Hey all, welcome to ShareTrek. I had made a video long time back on Invitae, and then I did not do anything about Invitae for a long time. I was more focused on other genomic companies. Recently, a subscriber requested me to have a look at Invitae, so this video addresses that request. This time, I'm going to dig into more details about the company's offerings and update on some recent developments. And to try to draw some conclusion whether Invitae is overpriced or underpriced and what are the prospects for Invitae. Let's get started. Welcome back, friends. I had to re-record the entire segment because my wireless mic ran out of power, and I did not notice that until I started editing the videos. And I found that 70% of my recordings didn't have any audio track. So I'm doing this all over again. So this has taken me much longer than I imagined. But I hope this video is worth it, and I hope you guys enjoy it. So I'd like to talk about Invitae, which is a genetic testing company. The best thing about Invitae is that their tests are all priced reasonably and have insurance coverage in the United States. In the United States, they have 6 tests, of which four are priced at $250 and 1 at $350. The price for the 6th test is undisclosed as it pertains to to diagnostic testings, and the scope might vary. In Canada, they offer only 4 tests, and 3 of them are priced much higher at USD $299, with their Invitae genetic health screening coming in at USD $399. So I think that from their pricing perspective, pricing it in US dollars is not a good move for Canada, in my personal opinion. And also, if you convert the USD $299 and $399 to Canadian dollars, it's a stiff price. So I think I would have preferred that they did a penetrating pricing model where you price a product much lower in order to get an uptake, and then you slowly increase the price. They haven't done that. They have used a skimming price model, just taking the top layer. So they are not looking at much breadth in Canada, it seems, based on their pricing model. In Australia, they offer only 3 tests. All are priced under Australian dollar 600. I don't know whether Australian dollar 600 is a big amount. Any of our viewers who are from Australia or who are familiar with cost of living in Australia, please put in the comments what you think about the pricing in Australia for their tests. And the first test is in the US is a carrier screening, and it tests 288 genes to find if a parent can pass genetic defects to the offspring. The second test is the cancer screening test, and presently tests 61 genes to assess the inherited risk of any type of cancer. The third test is for cardio screening and looks at 77 genes to assess inherited cardiovascular disease. The fourth test is the Invitae genetic health screening test, which is a combo of the first 2 and a little more, and it looks at 147 genes to assess the risk for both inherited cancer as well as cardiac diseases and a few more conditions. The fifth test is the pharmacogenomics panel that tests 38 genes to predict the response to medications in case a patient was worried about taking a particular medication before commencing the regime. That said, I have been searching for product-wise revenue breakup, which I thought was the next logical step, but I was unable to find much information except 2 data points. The first data point comes from Q1 2021, and here is what I found. If you look at this spreadsheet, you would see that they have data from Q1 2020 here and Q1 2021. We can see that a new revenue source has been gained in 2021. That is a biopharma partner, whereas the institution's revenue stream has been lost. But overall, year over year, quarter by quarter, the revenue has been increasing. You can see that the direct patient revenue has increased from 5.79 to 8.95 for Q1 2021 as against Q1 2020. And you can see that the insurance patient revenue has increased from 43.79 in Q1 2021 to 60.89 in Q1 2021. We have a new revenue stream in Q1 2021 of B2B, which is priced at around $20.06 million. All these figures are in millions. And we can see that the revenue growth has been accelerating, and this trend can continue for the company because there's a huge market for its services. And with every subsequent acquisitions, Invitae is able to tap a new market. Next, I would like to present the second data set, which I got from their Q2 presentation. And we have a different breakup And this is the most recent data set, and let's quickly review this slide. As you can see here, we have four segments out here. One is data and services, other is rare diseases, and next one is women's health, and the final one is oncology. And you can see that from Q1 2020 to Q1 2021 to Q1 2022, the revenue in millions has been accelerating from 64 million to 104 million to 124 million for the Q1 of each of these years respectively. And some of the biggest increase I have seen are in oncology and also on the women's health side, because that's where you can see much pronounced growth. And also you see some in the rare diseases area. Of course, there will be more segments introduced. We need to find a reliable breakup of revenue, which we can compare from year to year, because right now we don't have apples to apples comparison. We have different slices of the data, but still, from whichever way you look at it, it's looking positive. However, when we look at the financials of the company, the EPS is still negative, but the financial performance is improving as Invitae is focused on reducing the cash burn. A good portion of its cash burn has gone into acquisitions. This year, they plan to reduce cash burn by $200 million, and have had no acquisitions so far. The company aims to be cash flow positive by 2025. So far, Invitae has acquired 14 companies, and I have information about 11 of them here. Actually, I have information about 13 of them here. I was not able to get information about the 14th company. If any of you know of that company, just please put it in the comments so that we have a complete understanding. And I'm going to show you a slide here, and I'm going to walk you through it. In this particular slide, you will see that we have 13 companies listed out here. They were all taken over by Invitae, and on an average, I think Invitae has spent upwards of $50 million for each of the acquisition overall, with an outlier, which is Archer DX, which was acquired for $1.04 billion in 2013. Apart from that, the others are all smaller acquisitions comparatively. And 2017 was the biggest year of acquisition, where Invitae acquired Alta Voice, Citizen, Combimetrics, and Good Start, 4 companies. And again, in 2019, they acquired 2 companies, Clear Genetic and Jugla, for $50 million each. And 2020 saw Genelux being acquired at $20.7 million. And 2021 saw 2 more acquisitions, a company called OneCodex, for which the acquisition price is not available, and another company called Genosity was acquired for $200 million. And in 2021, Invitae got a lot of cash infusion. I'll talk about that as I go ahead. But as you can see, my friends, these are all various companies that was acquired by Invitae in order to build a broad-based genetic testing company. And I think they have succeeded because they are trying to exploit the synergies of all these acquisitions. And the acquisitions have helped Invitae to build up a well-rounded portfolio of genetic tests and consolidate its position in the industry. Talking of the industry size, the global rare disease genetic testing market size has been valued at US $785.8 million in 2021, and it is expected to grow at a compounded annual growth rate of 13.94% from 2022 onwards all the way to 2030. Invitae is operating only in the advanced economies of US, Canada, and Australia, which have a higher per capita income and insurance coverage. Therefore, the uptake is much higher. This leaves a large potential for Invitae to expand globally, and that can mean incremental revenues. Maybe the margins might drop a little, but overall, the revenues will go up, and also the overall earnings per share is likely to go up further. That's my expectation for this company. Let us look at the TradingView platform and check out the price action on Invitae stock and see how far it has fallen and what is the potential for it to bounce back when the market conditions improve. So here we are in the TradingView platform. I'm looking at the chart for Invitae. This is the very near-term chart. Each of these candles is a one-day candle. And today we are having a good deal of support from 2.56, which is a horizontal support. And we also have support from the 10-day simple moving average, which is this yellow line that you see here, thick yellow curvy line. It's sitting at 2.52. And right now the market is at 2.61 for Invitae. It's a drop of around 9% since yesterday. And we have resistance, which is this thick fluorescent blue line that you see here. It's the 100-day simple moving average that is sitting at 3.03. And that's going to be our next level of resistance. The MACD is bearish, and the momentum is below average and dropping. The momentum needs to pick up for this share to do better. But if I was to scroll out of this chart and go on to show you how much it has dropped from its peak, so you will see that at one point of time, Invitae was at 61.80, and since then it has dropped all the way. Let us go all the way up to 2.61. 2.61 is somewhere out. 2.64 is what I have here. So it's dropped around 95 to 96% so far from its peak. And there's a revenue stream out here as compared to our other genomic therapy companies. So overall, I think that there is a lot of bounce back available for Invitae, and it should prove to be a good investment in my personal opinion. Well, friends, while the story looks good so far, once you take a look at the balance sheet of this company, you can understand why the share price has fallen so much. We have to keep that also in our consideration, regardless of the bullish sentiments that we might feel, because at the end of the day, every debt has to be paid back. So let me take you to the balance sheet of the company and let us compare the trends of how their debt has been growing. And there are a few other factors that we have to keep in mind when we look at the share price. Let's do that. So here I am in Yahoo Finance. I'm looking at the balance sheet of Invitae. So this is for Invitae out here. And if you look at the balance sheet, the way it's organized is at the extreme right side, we have the stats for 31st December 2018. And on the extreme left, we have the balance sheet for 31st December 2021. So we are going from the oldest to the latest. Now, if we look at some of the columns out here, first let us start off with total debt. You can see that the total debt has been constantly increasing. So when the total debt increases, that's a matter of caution. However, when you look at net debt has also increased significantly. So the net debt gives you an idea that this company, if it was to be wound up at this point of time, it wouldn't have as much assets, because first this debt has to be paid off. Now, if you look at the other area that I'm concerned about in most of the companies, it is equity dilutions. You can see that the equity share numbers have jumped significantly. When we were at a peak in 2020, when we saw the highest valuation for this company, it had 886,000 shares outstanding. Whereas at this point of time, the same has jumped to around 228,116,000. So that's a huge jump. That's heavy equity dilution. And regardless of the 1.15 billion invested by SoftBank, at this point of time, we have a net debt of 279,000. So that's a huge number. And that's the reason why Invitae shares are so low at this point of time. So the company is moving in the right direction by cutting its cash burn, because when it cuts its cash burn, it would be able to service more of its debts and come out of it. And especially in this high debt environment, the biggest risk for this company is in any kind of refinancing. Any kind of refinancing in this environment, I think, is going to be very expensive and put a further drag on the company. And also the ability of the company to gather any new finances in suitable terms in this particular environment is difficult unless it gets into a positive EPS. So all of that put together, there is a risk aspect also in this company, but at the same time, there is the global growth opportunity which is available. So all put together, I think it's a mixed bag. But if you feel adventurous, it's worthwhile stocking off maybe 1,000 shares at this current price, with the ability to hold on for another 2 or 3 years to see the gains come through. So overall, I think it's a calculated risk as far as Invitae is concerned. That's how I would like to end my presentation. I hope you liked this video, and if you did, please press a like out there. And if you have not yet subscribed, I would request you to subscribe and help me grow this channel. Thanks and have a great day. Bye for now.